G'day folks, welcome back to Pete's Investing. It's March 13, 2024. This is the gold technical analysis. We're still in a bullish trend, but watch out, there is a divergence still in play, even though it's hit our initial target areas on the Fibonacci retracements. So I've got here the weekly, the daily and the hourly, and when we're trading on the lower time frames like the hourly or the 2 hour, etc., we look at the trends on the weekly and the daily. So down here we've got the trend indicator, which is the ADX 25, and they're both showing bullish momentum, although the hourly is broken down into a bearish trend at the moment. Our secondary or level of trend indicator is this CCI 150. When it breaks above this channel of moving averages, that's considered a bullish direction. You can see here on the daily as well, it did break above the moving average band, and it's currently broken back into that band, so we avoid taking any long trades until we see it bounce back out of that again. So at the moment, avoid taking long or short trades until we see it break outside of this band. Now, in terms of where it's gone and where it might be going, let's look at the daily first. You can see here we've got a Fibonacci expansion between that range there and down to that level, and it's gone as high as the 61% expansion of that Fibonacci range on the daily. Now it's come back, and again, if you look at the hourly chart, we've got a separate Fibonacci retracement level from that low to that high. And we look at the initial target area, and that's the 23 or the 38% level. You can see those wicks of those candles have just penetrated that target area. So that could be a bounce from there, but if it does actually correct and continue to the downside, the next level we're going to look out for is the 61% level. So it could always bounce at any one of these Fibonacci retracement levels, but at the moment it's actually technically hit that target area with that wick on that candle. Now you'll notice there was a bearish, and there still is a bearish divergence on the hourly time frame with lower highs on the CCI versus higher highs on the price, and that could have been just the start of that action in play. There's also a bearish divergence on the daily. You can see there similarly, and that's a bearish lower highs on the CCI versus higher highs on the price. And after hitting that resistance at 21.95, we might see it starting to pull back further, as we said, on the hourly time frame. So in terms of a trading idea, what we have here is the daily, and we've got the 1 hour chart here using the average down approach, and the 1 hour chart here using the stop loss approach. So what we do is, the first one of the rules, or the main rules, is when it breaks above this channel or this band of moving averages, we take long positions when the weekly and the daily are also long, and both when the weekly and the daily are going short, like in this case here, you take short positions only when the weekly and daily are both short. So at the moment, in the last few days, would have been going long, and at the moment we avoid taking any long or short trades because it's entered that band of moving averages. So what I've got back here on the average down approach is you can see that back tested to the start of that. When it breaks outside of that band of moving averages, we go long, and you would have taken long positions and stopped taking long positions around that point there when it broke below the band. But overall, in terms of gold, it's made $103 on the average down approach versus $12 on the stop loss approach. And the rules are at the end of this video. Just stay tuned for those two slides to show you both the average down and the stop loss approach. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.